Hello, I'm Deborah Malone, founder of The Internationalist and host of Internationalist Marketing TV. Today's guest is Brian Wieser, founder of the new media and advertising consultancy for investors, private equity firms, and other industry players called Madison and Wall. Brian, it is always a pleasure to see you, even if it is virtually. And really delighted that you are here, particularly with the news of the week.
Yeah, thanks for having me. I announced that I'm started consulting practice called Madison and Wall, and a publishing entity too, I guess, because I've already started cranking out some of the reports that I used to do.
Oh, well, you couldn't get a more iconic name, right? With Madison and Wall, with the intersection of media and advertising and investing. Well, sometimes I wonder, though, in our virtual world, how much is left on Madison and how much is left on Wall Street, but it's iconic.
It is funny though, because I actually was in New York part of this week, and I was on Madison Avenue, a good chunk of it, which is to say that means I couldn't have been at an agency because there really aren't any left. Um, No, but I mean, it's interesting. I started producing a newsletter about a decade ago called Madison and Wall. And some people may remember getting that when I was at Pivotal Research, and it was meant to be very thematic and again touching those intersections conceptually at least. So even if there aren't any advertising agencies left on Madison Avenue, and if advertising is really as much in downtown New York as it is in Silicon Valley and San Francisco and London and everywhere else, then at least I'm trying to touch on the concept of what it used to represent.
Well, I just think it's iconic, and I think that that's a wonderful place to start. So let's go. I don't want to say from the sublime to the ridiculous, but let's now go to some specifics because it's a very interesting time that you've decided to do this. Because I'd say that in the last several months, if not the last year, there's just been such a major shift in digital media, well, slowing, right? The growth of digital media slowing, and then the acceleration of other things like retail media or connected TV. And I actually think that I read very recently that it's the first time since 2014 that Google and Meta collectively have brought in less than half of all US digital ad spending. So what does this mean? What does it mean for advertisers in this space, or does it mean advertisers just holding back?
The first thing I do is always check the data. And you're right, there was a lot of reporting about that
Uh,
last week. It is really important to remember that um, the reality is that that was an estimate on a net basis, not a gross basis. And I think it gave a mistaken characterization of the market if you take that at face value to suggest that they're just not that dominant. On a gross basis, meaning at the point of revenue collection, they're still north of 70%. And I think that's kind of important. Moreover, if you add Amazon to that group, it's probably 80%. And there's nothing wrong with that necessarily. But if you're assessing the industry and its trends, its landscape, I mean, again, I think it really depends on, the number is not wrong necessarily, depending on whose lens you're looking at it through. If you're looking at through the lens, I would argue, of most of the industry and most of the things they care about, I'd suggest the growth basis is the one to look at. So, start, and this is what's the saying? In God we trust. Everybody else better bring numbers.
mm,
Okay, so I'll bring the numbers. I'll
mhm.
probably scrub the numbers. I'll probably question the numbers, maybe even if I made them in the past. At least I know what went into the numbers. I know what the assumptions were that went into the numbers that might be used to benchmark growth, benchmark market share, or anything like that. And then the question is, yeah, to your point, like, what do you do with it? What does it mean? And I think it's relevant to say in this case, the industry is still very concentrated in with Google, Facebook, and Amazon. And a bigger point of data to look at is, again, when someone can frame the data in one way, and it can be a mistake to accept that as the only frame, or to infer certain things that may or may not be true. Certainly, when I was at Group M, we were trying to pound the table on this point. I suspect they will continue to do so. I will continue to do so. that a lot of us are looking, a lot of the industry has looked at concentration the wrong way. They've looked at market share the wrong way. By looking at it at a single country level, you get a very distorted and mistaken view. So what if 50% or 70%, whatever the number is, up or down, let's just assume it's falling, because almost by definition, if you have TikTok growing fast and Amazon growing fast, yeah, of course you're going to see declining share from Google and Facebook. Fine, that's whatever. But the bigger point is that if you look at how concentrations trended globally, from in 2016, the 17 largest sellers of advertising that weren't in China or based in China account for about 45% of all global advertising, not just digital, but all global advertising. That same group of 17 is probably now around 80%. And again, not of digital, but of all advertising. This is a really important point, and they're almost all American. And there's a really important point in this idea that the reason why it's all American is because non-American players are, for the most part, not investing against growth opportunities. And if you constrain your operations to a single market, you're asking to be crushed by those who are going to have global scale in whatever they do. And to some degree, there are companies who can complain about Google and Facebook all they want, but show me their money, show me their investment. Now, in some cases there were, and obviously there are allegations of all sorts of things that happened and didn't happen. But for the most part, there are so many companies where, if they think $10 million or euros is a big investment, they might as well just go home and wind it down. They're not thinking, first of all, they're probably not thinking big enough. And they're not recognizing the kind of scale you need to compete. Capital's still out there. And this goes back to where I think I have some advantage relative to people who may be coming at strategy purely from a legacy strategy perspective. I come at it from an understanding of what investors are willing to support, whether public or private. A credible growth strategy will be able to attract capital. A 5% Fed funds rate is nothing in context of a credible growth strategy. It shouldn't stop anyone from being able to raise money. There's so much dry powder out there. And so when companies think that, oh no, we're getting attacked by Google and Facebook and American and Amazon and the Americans, the answer is, well, compete globally. You've got a shot. So that's what's
No,
going on.
no, I know. And you've talked about that for a long time, the whole global local issue. I mean, it's back to the old think
We
global.
are on the internationalist, aren't we?
Yes, of course, which is I was actually going to talk about that a little later, but you brought it up immediately. And I think that that is, quite an interesting point, because we used to so often think about, oh, which is the growth market, which is this. But again, when you're talking about media and investment in media, it is interesting that there is still a global dominance, particularly by the US, and I would say after that the Chinese, right?
Well, but the Chinese have kept mostly to China, right? And
Mhm.
so,
Except for ByteDance now, right? Yeah.
except for
Yeah.
ByteDance, the one
Yeah.
exception, and
Yeah.
we'll see how that
Yeah.
goes, right? Because
Yeah.
they're straddling this line between trying to play in Western markets and trying not to do things that will cause offense at home. And we've already seen some of the Chinese-based companies retrenching. They might be the exception that proves the rule if they're successful. So good for them. But I find myself returning to where I was, as an analyst, where I could pretty safely ignore China from a vantage point of not having to, not that it's not important or interesting, right? But it's so independent
Local.
and idiosyncratic. Yeah. And I mean, I guess I should clarify to my point, ex-China, and I'll say ex-Russia while we're at it, but ex-China, the world is increasingly globalized. China is the exception because of the policies their governments have put in place, and it is what it is. You can analyze the rest of the world pretty independently of it. And the company I like to call out, though, as a counterexample is Viaplay, right? And I don't think they get enough attention for what they're doing, at least not in the US. But small Swedish company, right? Kind of spun out of Modern Times Group, Swedish broadcaster. They are the only exception I can point to of a non-American company that is aggressively, relative to its size, investing against growth opportunities in streaming. They're licensing sports content in markets outside their home market. They are launching in the US soon. It'll be, I think they're going to be happy with a few million subscribers to a streaming service. For them, that's huge, right? It's not very impactful in the overall industry, but it's such a great case study that, you think about where they are in Sweden and how do they just stay still and wait for Amazon and Netflix to just dominate them, let alone Disney, let alone eventually Comcast, etc. No.
Well, what about something like BritBox? I mean, that has a nationality to it. I mean, it's also a little bit of beyond
Also a great
England
case
too.
study. For them, it feels like tens of millions of pounds is a lot of money. And I like to joke, it's a shame the world doesn't have much of an appetite for British content. It's a joke.
Yeah, of course. Yeah, yeah.
Right?
No, I mean,
So
it's amazing. Well, there's also
why?
Acorn as well. But yeah,
I know,
yeah,
but in a
yeah.
world where Netflix is spending £1 billion annually on British content, what's BritBox's budget? Tens of millions, maybe. Like it's in some respects shocking that there's and maybe it's I personally don't know the exact reasons why. I can imagine, and there's always a certain conservatism on boards of public companies, which can, especially in Europe, which can cause limitations. But I don't know what stops them from seeing that if they were to invest a billion or two in the streaming service, like not 5 years from now, but now, that they would have a very big and probably more profitable business. And meanwhile, ITV is just waiting for somebody to come buy them. And
Well,
that's going to hurt them.
well, you never know. Sometimes, what we have on our side is size and scale. And sometimes that's daunting
It is.
to
And
countries that are much smaller, even
says
though they
me, the
have
Canadian,
they punch above their weight in terms of influence. You're absolutely right.
I still remember, and so it's I'm Canadian, right, by birth, from Vancouver, BC, and I grew up and I spent a lot of time in the music world, independent music in particular, and I still remember that anytime there was a band that had a shot of, let's just say, turning music into a full-time job, uh, touring, making music, or otherwise, all the incentives in Canada were to go east, west, east, west, east, west. That meant that you start from Vancouver, or you could start in Toronto, Montreal, whatever. And you think about what the distances are for a population of now 30 million, right? And you would spend all your time developing your followings there. I mean, and you'd build a really big brand in the country or whatever if you're successful. And then you'd get used to a certain sort of stature, and maybe your best days were kind of behind you. Then you realize, oh, we really kind of, if we want to get any bigger, we kind of need to break into the United States or elsewhere. And it was really hard, and very few bands did. The ones who did the best in music tended to be those who just kind of ignored the subsidies and just kind of just said, we're just going to focus on the US. We're going to focus on or Europe for that matter. We're going to focus on the bigger markets first. We're not going to go east, west, east, west, east, west. So I see that playing out in, it's easier to compete inside of your home market. It's more comfortable, it's more predictable, but it's one thing in music where, hey, if it's just what you're doing before you settle down with a real job or a different real job, that's fine. But if your goal is to actually future proof your business in the media industry, if you're not pursuing a global strategy, your risk profile is substantially higher by not going global than by staying local.
Yeah, and for some people that can be daunting. But now let's look at the flip side of that, based on something that again is a recent event, and that's the filing of the complaint by the DOJ and several states against Google, right, for monopolizing multiple digital advertising technology products. Now, I mean, I think we know we're talking internationalist. The U.S. complaint is just the latest in a series of efforts, by governments and regulators around the world to curtail, as you could say, not only the world's biggest technology companies, but also the world's largest sellers of advertising. So, what's your take on all this?
Well, I mean, there seems to be a certain inevitability in my mind that at some point, either a government in the US or Europe wins in a meaningful way, or Alphabet just decides it's not worth the effort. Whatever advantages they see, you have to imagine that they're constrained in their actions. They can't move as freely as they would want to. That has to hurt. And independent of what the rights and wrongs are, and I'm not a lawyer, and it's hard to know. Like, again, when I read the complaint, it's like I was, without having been in a lot of the weeds, I can't say there was a lot that surprised me from someone who pays attention to everything over the years, and whether or not that meets the definition that the DOJ is looking for, or that a court would be looking for, or a jury would be looking for, I have no idea. But it's beside that point, because when you have regulators taking so many kicks at the can, and there's no plausible scenario I can imagine where they stop. And that means there's also then no plausible scenario where they're going to feel, if you're Alphabet, there's no scenario where they're not going to feel constrained. I mean, it's possible they try to hang on and not and avoid doing it, but it just seems like it's inevitable that at some point they will just split off at least part of that business.
It's not that we haven't seen it before in other industries.
No, but we do have
Yeah.
to think about the consequences of it, and what is it. And again, you have to imagine. It's all about the scenario plan that you want to anticipate. What happens if? And again, what I wrote in a piece this week where I'm saying my guess is that, and this is not knowing anything, private information based, but just understanding companies in general. That any large company will always have a capital allocation challenge. And it's always hard to identify, where do you allocate capital? Not every great project gets funded. And certainly small ones are less likely to see the light of day sometimes, because if it doesn't move a certain needle, it's just never going to get the managerial attention. So you choose not to invest in those things. And so the smaller the company, assuming you're big enough to have that global scale and big enough to realize efficiencies in all of your operations, it seems that capital allocation choices into things like growth opportunities via acquisition or new initiatives or something are just, they're easier to make because you're not competing with other divisions of a bigger company to make those decisions. You have more latitude. So my guess is that you actually wind up with a more competitive business. It could go the other way, but my guess is that it ends up being more competitive, not less. And that
Um,
means concentration actually goes up in those narrower spheres. But it could also catalyze a lot of investment, because there are others who say, hey, now's our chance, while they're figuring themselves out. And so let's make other investments. And then there's a bunch of innovation. And then maybe the whole sector does grow at a faster pace as a result.
I don't know, or it all goes to outer space, or
Yes. Well, no one's got ad tech on Mars yet. So
or wherever the next frontier is. So just getting back down to earth a little, or out of the metaverse. Where do you see the platforms going in 2023? Are we talking, are we seeing more layoffs? I mean, I hate to say that, or are we seeing increases in ad dollars, towards social media? What do you think?
yeah, well, there needs to be a greater appreciation of the limits of growth for the industry, meaning that there really shouldn't be a reason to expect that advertising can sustainably grow at a lot more than a mid-single digit level at a global on a global basis. Sure, you can have years that are a bit anomalous, but generally speaking, you shouldn't be planning on a lot more than that in the long term. And I think that there's a problem. I observe that many of the world's largest technology companies are not as, shall we say, attuned to advertising. I used to joke. I remember meeting with decade ago, maybe, a very large Japanese company that wanted to expand into advertising outside of Japan. And I remember my first main piece of wisdom was, whatever you do, don't go south of SFO. Just in terms, if you want to understand the advertising business, like in the San Francisco area, you want to talk to the crotchety old, like traditional agency folks who everybody ignores, and maybe, find the few media agencies that were there and talk to those people, because they probably have a better understanding of what really drives advertising in the media industry than Silicon Valley, despite the fact that Silicon Valley might have all the money. Um, and that's not to say there's tons of people inside those companies who know what they're doing with advertising, and mostly they're in New York or London, by the way. Um, so that's kind of important to note, because that's where the heart of the business still remains. So in terms of understanding the industry and its dynamics, I mean, it does seem like companies tend to give themselves credit for when things go well and tend to blame others or external factors when they go badly. And I think that um, there's a belief that if you, and this is not unique to the digital world, there's a belief that if you, for example, produce more inventory and you can justify a higher price, you can keep raising revenue. It's as simple as that, right? That's a very much a salesperson's perspective. You see this even in television, where you see salespeople talk about, well, if you look at what their sales models look like, it's like that. But that ignores that the pools of spending are finite. They're not infinite. Demand is not driven by supply. They can be on the margins, really, but not really. And so it's one thing to take share of an industry, as digital did for the most part. It's another to cultivate where the economy is growing and find ad products to service those newer players who replace others that go away, creative destruction, as we've certainly written about a lot. But at the end of the day, in aggregate, the whole industry can only grow so much no matter what the companies do. And in that context, if the digital ad players in general are, how, depending on your definition, 70 or 80% of the industry, how can you possibly grow faster than the overall market forever? I mean, for a few more years, sure. But it's not like television is just going to fall off a cliff. Well, it might. It's at the precipice, as we know. It's not like radio and outdoor just go to zero, right? You can argue that they're going to decline, but they're not going to go to zero. So that means you can't get to 100% ever. And that means that growth has to decelerate. I don't believe that there was let's say, a widespread appreciation of this across, certainly not the investor community, let alone many people in the industry. And just to counterpoint, or to illustrate further, it's not this extreme, but you think about television again as an example. A salesperson thinks, if we produce more audience and we can raise our price, we can drive more revenue, right? The problem is everyone else does the same thing, but the pool of spending is exactly the same. But the reason why that is that at least there, you've got a relatively commoditized product. One network's inventory is essentially comparable to someone else's. That's not true so much in the digital world. So just having more inventory by itself, you can't really compare it directly. There's nothing exactly like Facebook. There's nothing exactly like Amazon, nothing exactly like, well, Google search does have Bing. That's a fair point, but the gap of reach of them are so different that they're not even comparable in that sense. But what's interesting is that subjective factors can cause changes in preferences and can cause shifts of market share. And so I do think that that's kind of where we're going. Like, sure, it's positive if you have more inventory. If you're a small player, a niche digital player, and you've got room to double your inventory, I mean, for sure, you're going to grow just by that alone. You'll have more inventory to sell, and great. But the bigger opportunities, I think, are ultimately figuring out, why is your proposition different? Why is it better for some segment of advertiser? And how can you capture an increasing share of the market for whatever that growth rate is? But everyone can't assume that they're going to grow double digits in an industry that's growing by singles.
No, you raise some good points, and so much of it is about expectation. I have two quick questions for you. Then, in that regard, do you still anticipate then that all media spending will surpass $1 trillion by 2025?
Well, I would defer to the Group M numbers because those are still built on work that I did over the years. But one of the challenges with the numbers, by the way, in terms of the specific timing, is what happens to currency. Because honestly, or you have to keep in mind, like if the US is whatever a third of the total, and if currency in the rest of the world, I mean, as we saw this volatile market for currency in 2022 in particular, that could change your year when you say, is it a trillion or not a trillion? But do I think the industry can grow by mid-single digits? And I mean, I still have a lot of faith in certainly the Group M numbers that I was involved with, and Kate Scott Dawkins, who replaced me and is amazing. I'll certainly have a lot of faith in her numbers. Also, now that I'm not part of WPP anymore, I'm better able to engage with my former competitor and former successor, Vince Latang, over at Magna Global, and just saw him recently. They also do fantastic work.
No, there's a lot out there who are doing some interesting work. Zenith had a long history of it as well, and I know that you were there at Magna as well, weren't you?
Well, it was Magna where I was from
Yeah,
2003 to
initially. Yeah,
2011, yeah, and then
yeah.
Group M for 2019 to beginning of this year.
Mhm.
But no, I would still say that the Group M and Magna data, and I'm not just saying this because I built or
But
meaningfully
you know it
data sets.
well.
Yeah, but also I just think that the rigor that goes into those data sets is different than every other data set on Earth that I'm aware of.
You raised something obliquely before that I find rather interesting, and I don't even know that you realize that you referred to it. But you were talking a little bit in some ways about performance. And I know that you've said before that it's often rare that marketers define it in the same way that media owners do. So can you just elaborate on that a little bit?
Well, I mean, here's the thing. Performance is a very subjective thing because what do you include or not include in your definition of in your inputs that go into this calculation? And for that matter, what do you define that goes into your outputs? Are you defining a successful advertising campaign as a sale now, meaning you don't care about what happens next year, so you shouldn't include it? You should include like that the fact that someone bought something now has some residual effect that causes people to be more likely to repeat a purchase or an action in the future? Are you counting for that in the model? And back to the inputs, which is where the bigger issue is. It's like, how are you capturing for word of mouth? How are you capturing perceptions of a brand attribute that might have been formed when someone was a kid and they're an adult now? How is that embedded into it? There are, I'm sure, millions and millions of data points, most of which are either untrackable or never have been tracked or only at best subjectively tracked, which contribute to outcomes. And because you don't see many marketers doing properly controlled, structured A/B tests, like how many marketers are willing to say, I'm going to risk blowing up my business by only advertising in half the country to create a control for the other half to see what the impact was. And by the way, to make this a proper control, because we know that the brand perception might last for 20 years, we'll stop advertising for a couple of decades and see what happens. It's never going to happen. I actually do know of one marketer, by the way, who is sacrificing Denmark in this regard, by which I mean they actually want to understand the impact of their advertising. And they basically would say, let's stop advertising in Denmark. We'll continue with one set of advertising in Sweden and another in Norway. And now, make sure that all of your ecosystem is cool with this. Like, make sure your salespeople still get paid because, hey, imagine you're a salesperson for any given product and your company says, we're going to go from being an advertiser to not advertising. You're okay with that, right? Salesperson who's got a quota, well, you got to make them whole. How about the distributor? Well, you got to make them whole too. And the retail, you got to make them whole too. So figuring out how to do that is a whole thing. But assuming you do that, now you create a control. And then if you could actually then have the tolerance to do this for a few years, and then if you made sure that every other condition was as similar as possible between two different countries, and then you see what is the impact relative to the control, How many companies are willing to do this? Like almost none.
Well, the only
But
thing I
that's the
can
way.
think of, no, is what happened a couple of years ago when a number of companies stopped advertising for a
Yes,
number
on
of
Facebook.
weeks or months. Yeah, yeah, yeah. That was due to more of a brand safety issue. And I think that one of the results, or at least I recall in terms of Procter and Gamble, was I think that they found that there wasn't a sizable difference to their business, and as a result of that, they just concentrated their digital spend when it came up in a,
Yeah.
a certain number of them. And I think the point was to say that there were so many, I guess through programmatic, that they were being disseminated to that, 2/3 of them didn't matter.
Yeah, and I'm not disagreeing with that as a very possible outcome from that, like exactly that. Like you could see, according to your data, going dark on a given publisher or entity had the effect of showing you what its contribution to performance was. If but there's also saying that torture data long enough, it'll tell you anything you want it to. And so I observe that broadly, and this is not necessarily I'm not actually saying it's a bad thing at all. I think when you're building a business, you start with a hunch about where things can go, and you look for data points wherever you can, sure, but you got to start with your hunch based on experience, wisdom, observations, etc. Once you've then decided a strong brand is an important thing, like sure, you can find data all day long that'll support it. You could probably find some data that'll refute it too, and then you could say there's no two situations exactly alike, and so at the end of the day, it's judgment. Once you've decided strong brand matters, now does media matter? All right, well, probably. Then you start to say, okay, and again, it's still going to be pretty subjective, but the desire to use media as a means of supporting brand building is by itself a subjective choice because you have alternative ways you could accomplish similar goals. Um, and so from there, then you go to the individual media channel selection. Sure, you can look at a historical media mix model and say that, or use your past experience that says that, well, when we were in a similar situation, we found that this media mix tended to work for this kind of brand. But to say that that's directly applicable to the current circumstances is by itself subjective. So there's so much subjectivity that comes into this. Science helps to justify a view that you wanted to make, ideally. But I think that the best analysts of all of this sort of data understand the subjectivity of it. You have to go through the rabbit hole and you come right back out, or through the looking glass and you come right back out, and you realize that informed guesswork is kind of where you're at.
Well, you may be right. It's kind of like, searching for the holy grail of truth. I mean, it's based on perspective.
These are important points, though, again, for entities who are selling advertising or selling services in this industry to understand, because, under corporate decision making is its own thing. I always remember the book and documentary, The Corporation, came out about 20 years ago. The big takeaway from it was that corporations, if you were to assign human attributes to them, could be characterized as sociopaths. And that's not a judgment call. It's just a clinical diagnosis based on how they behave, which is understandable for a whole lot of reasons. That's not a good or bad thing. Well, it can be a bad thing if there's not. It's important for companies to realize that, because if they don't put appropriate controls from a board level or governance level or otherwise, bad things will happen from companies who aren't otherwise constrained. But once you get that, understand that element, then you understand that the ways in which corporate entities make decisions are fundamentally different than the ways that human beings, non-sociopathic human beings, make decisions. I remember, again, when I went from investment banking and being announced to my first stint in agency land, and I was supposed to produce these forecasts at Magnum, the advice I was given was, well, it's simple, Brian, just follow the consumer. And I did. And I found that had nothing to do with explaining anything, or very, very little. Or think about all of the times someone has said time and money are related, meaning they're again, sometimes bad data or data that goes unchallenged, unquestioned, that consumer time equals advertising dollars. How I'm sure you've seen those slides. I keep asking, there's a big mismatch with radio. How come that never gets corrected? Why is that? The anomalies are the interesting things to look at, by the way. I mean, it was obvious that digital was going to grow for a whole bunch of reasons. The time thing was never that big of a part of it. If time was the driver of advertising budgets, radio would see way more advertising. And I've argued for decades now, it won't ever see growth again for a whole bunch of reasons, based on the way the industry operates, based on the way it's structured, based on the whole local orientation, the fact that locally based advertisers have kind of been hollowed out, for lack of a better characterization, and the industry has stayed local when advertisers want to be national, not global. And time and money don't have anything to do with each other. And so you've got to recognize that consumers are not the ones who decide budgets, because last I checked, consumers don't spend any money on advertising, unless I'm mistaken. And so we want to make sure we understand how corporate decision makers make budget allocations. Sure, conscious that consumers tend to do this, tend to do that. And when you say that, hey, NBC has 20% audience share inside of national TV and Paramount has 18%, NBCU's gone to 21%, Paramount's gone down to 17% or whatever, is that going to cause an allocation difference? Sure. But across media, across marketing channels, no way. It's super subjective, and there's nothing wrong with it being subjective. But I think sellers need to understand that, because that's the environment into which they have to compete.
And I think it becomes difficult when you're looking for sometimes certain absolutes. But I have two short questions for you, because we could talk all day
Does that mean I have
about
to give
some
short
of this.
answers?
You don't have to at all. One's
Oh, good. Whew.
last year. Yeah, one's about last year and one's about the coming year. Or this year, I guess you
Hey, I
could
could create a
say.
new product called Last Year, This Year.
I know, I think you have. No. Oh my goodness. Substitute weeks there, right? So were there surprises for you in 2022? I mean, was it retail media? Was there any area that, or
I think the degree
let's
to
see.
which the advertising industry talked itself into a softer market than should have been the case.
Uh,
I kind of thought that the fact that the market, like consumers continued to spend, we ended up from a GDP perspective or a personal consumption expenditure perspective with as good a year as most of the 2010s rather.
mhm.
Like on a real inflation adjusted basis. And it's just, if you go back to the podcast we were, producing with my now former colleague and successor, Kate, that we were kind of trying to point this out, that the assumptions that we're going into recession in 2022 seemed not well founded based on a lot of reasons. And people using historical models to predict 2022 were kind of setting up a unlikely to be accurate situation, because there were still so many unusual things. But it felt like underlying conditions were actually still better than most people thought. Now, to be clear, I think that obviously we haven't seen all of 4Q come in. And I know we did bring down our numbers a little bit, but not by a lot. Growth was still real in advertising. Fourth quarter, we just heard Google's and Amazon's numbers, and I'll defer to Group M and Magna on how the fourth quarter exactly shook out. But let's assume it probably came out at a zero for advertising. And let's assume that, the rest of the year was probably a mid-single digit. First quarter was actually pretty good. But mid-single digits, mid to high, probably the way it came out, but a little bit softer than I expected to end the year. And because I think that, again, advertisers were listening to the doom and gloom, which, by the way, I hear now is going to be a 2024 event. So there you go. It's not. I mean, there's also saying economists have predicted 7 out of the last 5 recessions. That's a joke.
Yeah. Yeah, right. No, good point. Good point. Well, it also shows the psychological effect of it all. I mean, it
Yeah.
just that, and kind of that horde mentality or the group mentality about, well, I guess if they're cutting back, I better cut back. It's too bad. Well, okay. So We're down to a short question that might actually have a short answer, because I'm going to ask you if there is one word or phrase that you believe will characterize this year, 2023. What would it be?
Oof.
I know, tough for you, particularly tough for
Yeah.
you.
Oh. Um, I think normalcy.
Oh my goodness.
Yeah,
It
by
wasn't
the
what
time
I
we're
was
through the year,
expecting.
it'll feel like it was kind of a normal year.
That's very interesting. And we could use a normal year. I guess we'll get to a lot more hype again in 2024, or, given that, you know, we'll be on another election, although I know that you don't look at that necessarily as something that's entirely affecting the whole system, but I guess it can.
Oh, well, it does have
Yeah,
different impacts, but
yeah,
yeah,
yeah.
I've historically looked at the analyzed advertising market ex political because
Yes.
it is different in that respect. But there's definitely all sorts of ancillary knock-on effects, obviously, on society and the media industry broadly that I do, still care a lot about.
Yeah, yeah, and back to all those perceptions. Well, look, I do have to say, and I do mean this, that the meticulousness and the care that you take with thinking about delving into these numbers and the issues and the statements and thinking through just the psychological ramifications of it as well as everything else. It's just amazing, and you're a real treasure to this industry.
Well, thank you so much
And
for saying that. But so are you. I
yeah.
really appreciate getting everything you publish.
Oh, well, isn't this the wonderful Fan Appreciation Day here? But, well, but thank you. And, I am delighted to be with you. And we should do this a lot more often
Oh,
because, things do change. Things do change a lot. And
absolutely.
absolutely good luck, in the wonderful name of Madison and Wall.
Thank you very much. Thanks, everyone.
All right. Bye-bye now. Bye.
Bye.
The Internationalist focuses on the continual reinvention of marketing by highlighting inspirational marketers around the world and their ideas as they move the industry forward. Internationalist Marketing TV shares these perspectives through interviews and personal stories. Thanks so much for watching. If you find this kind of content helpful, please click like or subscribe. Again, thanks so much.